Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski. The euro moved lower after reports that Iran attacked a US military vessel attempting to enter the Strait of Hormuz area. However, US media have not yet confirmed this information. Setting aside the risk of the new military confrontation between the US and Iran, which continues to support the dollar, market attention in the second half of the day will shift to US factory orders data and the comments from FOMC member John Williams. If EURUSD declines again, a false breakout around 1.1698 support level would provide a long entry, targeting a recovery toward 1723. A breakout and retest of this level from above would confirm bullish momentum and open the way towards 1749, potentially triggering a new bullish trend. The final upside target stands at 1767, where you would take profit. If EURUSD continues to fall and shows no activity around 1698, downside pressure is likely to return, pushing the pair towards 1675. Only a false breakout there would justify long positions. Alternatively, I would consider buying on a rebound from 1657, targeting an intraday move of 30-35 pips. Sellers stepped in aggressively, and if the reports are confirmed, a potential US response against Iran could trigger further downside in EURUSD. And the pair attempts to rise, bears will need to defend the 1.1723 resistance level. Formed during the first half of the day, a false breakout there would provide a sure entry point, targeting a move to 1.1698. A breakout and consolidation below this level would open the way for further downside target 1675, where we would expect stronger buying activity. The final target stands at 1.1657, where you would take profit. If EURUSD continues to move higher and bears show no activity around 1723, buyers may gain momentum and push the pair towards 1749. I would only consider selling there after a failed breakout. Alternatively, you could plan to open short positions on a rebound from the 1767, targeting a 30-35 pip downward correction. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. You could plan to buy the pound today when the entry point is reached around 1.3557, with a target of 1.3602. Around 3602, we could exit long positions and open shorts in the opposite direction, expecting a 30-35 point move. Growth in the pound today can be expected only after weak US data. Before buying, make sure that the MACD is above the zero mark and just beginning to rise from it. You could also plan to buy the pound today in case of two consecutive price tests of 1.3531. When the MACD indicator is in an oversold area. This will limit the pair's downward potential and lead to an upward market reversal. Growth toward the opposite levels of 1.3557 and 3602 can be expected. Today, you could plan to sell the pound after a break below 35.31, which would lead to a rapid decline in the pair. The key target for sellers will be 34.85, where you could exit short positions and also open long positions in the opposite direction, expecting a 20-25-point move. Pressure on the pound will return today if US data is strong. Before selling, make sure that the MACD indicator is below the zero mark and just beginning to decline from it. You could also plan to sell the pound today in case of 2 consecutive price tests of 1.3557, when the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a downward reversal. A decline toward the opposite levels of 35.31 and 34.85 can be expected. That's all for today. See you online soon.